Hi dear, welcome to your favorite audiobook channel Wisdom Flicks, 1 Hour Trade by Brian P. Anderson. Introduction. The dream of 1 hour freedom. Imagine this. You wake up, make your coffee, glance out the window, and sit down in front of your computer. You're not rushing into traffic. You're not preparing for a draining 9 to 5 job. Instead, you spend one focused hour analyzing the markets, placing your trade, and walking away. The rest of the day is yours, to travel, to spend with family, to build other projects, or simply to relax. Sounds like a dream, right? Well, what if I told you that dream is entirely possible? Not just for professional hedge fund managers, but for everyday people. Yes, people just like you, who learn how to trade smartly, consistently, and with purpose. Welcome to 1 Hour Trade Mastery, a practical, streamlined system that empowers you to earn income through trading while reclaiming your time and mental freedom. This is not about gambling on the stock market. This is not a get-rich-quick scheme. And this is certainly not a flashy lifestyle pitch. This book is about building a repeatable system, one that allows you to spend just 60 focused minutes a day analyzing, executing, and reviewing trades that are rooted in logic, structure, and risk management. It's the strategy that changed the life of Brian P. Anderson, an everyday guy who found himself drowning in debt, overworked, and burnout from years of trying and failing in the markets. He didn't have thousands to lose. He didn't have a Wall Street education. But what he had was persistence, and the realization that to win, he didn't need more time. He needed a better system. That's where the 1 Hour Trade was born. The problem with most traders, let's be honest, most people who try trading fail. Not because they're not smart, not because they're not capable, but because they're doing it all wrong. They chase signals. They overtrade. They get emotional. They think more screen time means better results. But trading isn't about grinding all day long. It's about learning to see the market clearly, finding one solid opportunity, and managing it with discipline and consistency. And that's where the beauty of the 1 Hour Trade lies. It strips away the noise and shows you exactly how to choose the right stock, enter at the right time, manage risk the right way, exit confidently, win or lose, and then walk away for the day. It's not just a strategy. It's a lifestyle. Why this book? Why now? With the rise of remote work, market accessibility, and powerful trading tools, there has never been a better time to become a self-directed trader. But here's the thing. Information is everywhere. Strategies, gurus, indicators, fancy platforms. What's missing for most people is clarity and direction. That's why I wrote this book. Not to impress you with technical jargon, but to walk beside you as a trading mentor, giving you the exact blueprint to go from confused to confident in just 1 hour a day. Whether you're brand new to trading, someone who's lost money and wants to try again, this time smarter, or even a part-time trader looking for structure and simplicity, this book is for you. I'll take you step by step through the process, from selecting your stocks to entering trades, to protecting your capital and growing your confidence, all in a way that's practical, understandable, and easy to implement. 3 o'clock, what you can expect by the end of this book. You will white heavy checkmark understand what makes the 1 Hour Trade so effective. White heavy checkmark learn how to find and evaluate high probability setups. White heavy checkmark master entry and exit rules that keep emotions out of your trading. White heavy checkmark apply a risk management strategy that protects your capital. White heavy checkmark develop a daily routine that keeps you focused and efficient. White heavy checkmark build the mindset of a consistent trader who doesn't rely on luck. White heavy checkmark, and most importantly, white heavy checkmark trade for just 1 hour a day. Then go live your life. That you'll find charts explained in simple language, examples that make complex ideas feel obvious, and guidance that feels like a conversation, not a lecture. This book is written with the voice of someone who wants you to win. Not hype, not hope, just high-performance habits for real-world traders. 1 hour, one trade, one life. The 1 Hour Trade isn't just about making money. It's about freedom. It's about control over your time, your income, and your future. It's about proving that you don't have to choose between success and sanity. You can have both. You just need a system that works and the discipline to follow it.so. Whether you're listening in your car, on your walk, or while planning your next step in life, know this. You are 1 hour away from changing your financial future. Let's dive in. Chapter 1. Trading smarter, not harder. Let's start by addressing a painful truth that most traders eventually learn the hard way. Working harder doesn't always mean earning more, especially in the world of trading that we've been trained since childhood to believe that the more hours we put in, the greater the reward. That mindset may work in traditional jobs, but when it comes to trading the markets, effort without direction is just noise. And noise leads to burnout. Smart trading is not about watching the screen all day. It's about making intelligent, calculated moves in a focused window of time. The old way, more time equals more confusion in the beginning, most new traders fall into. The trap of overtrading. They believe that being glued to their monitors from market open to market close will somehow translate into more profit. Here's what usually happens. They start the day full of energy and optimism. They take a trade in the first 30 minutes, usually rushed, often emotional. They see a small win. Excited, they take another. Then the market shifts. Losses pile up. By the end of the day, they're exhausted, frustrated, and back at zero, or worse. And still, they repeat the same cycle the next day. This isn't trading. This is stress addiction disguised as productivity. The more time you spend in front of the market without a clear system, the more likely you are to second guess your strategy, chase trades, and make emotional decisions. The worst part? You begin to equate trading with struggle. The shift, quality over quantity. Let's flip the script. Instead of asking, how many trades can I take today? Start asking, what's the one high probability trade I can plan and execute today with confidence? This is the mindset of the 1 hour trader. Professional traders don't chase action, they wait for it. They don't need to be right all the time, they just need to be consistent. And most importantly, they understand that the goal is freedom, not constant hustle. By dedicating just one focused hour a day to trading, you force yourself to white heavy checkmark, be more selective, white heavy checkmark, stick to your rules, white heavy checkmark, avoid over trading, white heavy checkmark, preserve mental energy, white heavy checkmark, live a balanced, lifeless time in the market means less exposure to risk, and less stress means sharper decisions. The psychology behind smarter trading. Let's go deeper. Why do so many traders struggle to trade smarter? It's because most people tie their self-worth to being busy. We feel more productive when we're doing something, even if that something is costing us money and peace of mind. But the markets don't care how hard you work. They reward precision, not pressure. They reward discipline, not desperation. When you give yourself permission to trade only 1 hour a day, you're not being lazy, you're being focused. You're saying, I trust my strategy. I don't need to chase randomness. I wait for opportunity and strike with clarity. That's the mindset that separates the pros from the amateurs. The 1 hour trade advantage. The 1 hour trade strategy, which we'll dive deeper into in the next chapters, is designed around pre-market preparation, so you know exactly what you're looking for before the market opens. A strict trading window, so you don't get tempted by emotional trades throughout the day. Simple setups, so you don't need to stare at 20 indicators and second-guess yourself. Efficient journaling and review, so every trade teaches you something, even the losses. The power of this approach is that it gives you structure, and structure creates freedom. Let's face it, no one wants to spend 8 hours a day trading just to feel like a hamster on a wheel. The 1 hour trade frees you from that madness. Meet realistic results. Here's a mindset shift you need to adopt immediately. A small, consistent profit is better than a big, inconsistent one. Forget about doubling your account every month. That's fantasy thinking. Real traders understand that compounding small wins over time leads to massive growth. Let's say you start with $5,000. If you average just 2% return per week, compounded over the year, you're looking at more than 100% return without gambling or overtrading. And yes, those kinds of results are absolutely possible when you focus on one clean trade a day and manage risk correctly. That you're not trying to become a millionaire overnight. You're trying to build a system that lets you generate wealth consistently without losing sleep. Break free from the trading myths. Let's debunk some common myths that keep people trapped in poor trading habits. Myth 1. I need to be glued to my screen all day to catch opportunities. Truth. One good trade is often better than 10 average ones. The best setups don't require babysitting. Myth 2. More trades mean more chances to win. Truth. More trades mean more chances to make emotional mistakes. Smart traders wait for the high probability setups. Myth 3. I need to use complicated indicators and software. Truth. Simplicity is power. The 1-hour trade relies on price, action, and clear patterns, not confusing signals. Myth 4. It's not possible to make consistent money trading part-time. Truth. It's not only possible, it's what the 1-hour trade was built for. Final thoughts. It's not about doing more. It's about doing better. Let me leave you with this. The market doesn't reward the person who works the hardest. It rewards the person who works the smartest. If you're willing to commit to a disciplined, focused, and simple trading process, you can absolutely trade successfully in just 1 hour a day. You don't need more indicators. You don't need more screen time. You need clarity, commitment, and a proven plan. And that's exactly what this book is going to give you. Chapter 2. The 1-hour trade blueprint. Now that you understand the power of trading smarter, not harder, it's time to get into the heart of this strategy, the actual system. The blueprint. The clear and simple structure that allows you to consistently approach the market with confidence and walk away after just one focused hour a day. This is what I call the 1-hour trade blueprint, a step-by-step framework that takes the guesswork out of trading and replaces it with clarity, repetition, and results. Think of this chapter as your roadmap. Every great trader follows a system. And now, so will you, Brick. The 4 pillars of the 1-hour trade. At the core of the 1-hour trade blueprint are 4 essential pillars. These are the building blocks of your success. And together, they form a repeatable routine you can use every single day. Preparation, execution, risk management, review. Let's walk through each one in detail. Point 1. Preparation. Win the trade. Before it begins, the first step is preparation, because great trades aren't born on the fly. They're planned in advance. Here's what proper preparation looks like. Pre-market stock scanning. You don't go into battle without knowing your target. Each morning, scan for stocks that are active, have volume, and are moving with purpose. We'll cover how to find these in later chapters. Define your watch list. Limit yourself to 2 to 5 quality setups each day. Too many options lead to indecision and FOMO, fear of missing out. Mark key price levels. Identify support, resistance, and breakout zones. This helps you anticipate, not react. Know the market context. Are we in a bullish or bearish market? Is there news driving momentum? Be aware, but don't get overwhelmed. Your goal in preparation is simple. Walk into the market with a clear plan and zero emotion. When the bell rings, you should already know what you're watching, why you're watching it, and what price levels matter most. Point 2. Execution. 1 clean trade. Next comes the execution phase. This is where you enter the market, but only if your rules are met. The 1-hour trade is built on the idea of taking 1 high-probability trade per day. That's it. No need for 5 trades. No need to jump into every move. 1 great setup is all you need. Here's how smart execution works. Wait for confirmation. Don't anticipate a move. Let the price confirm it. Look for breakouts above resistance or breakdowns below support, backed by volume. Pull the trigger decisively. Once your setup confirms, enter your trade with purpose. Confidence comes from preparation. Use limit orders, not market orders. This gives you price control and prevents unnecessary slippage. Your execution needs to be calm, clean, and controlled. No rushing, no guessing, just doing what you plan to do when the moment is right. Point 3. Risk management. Protect your capital like a pro. If there's one truth in trading, it's this. You can't control the market, but you can control your risk. Risk management is the shield that protects your account and your mindset from destruction. The 1-hour trade blueprint uses simple, powerful risk rules. Never risk more than 1 to 2% of your account per trade. If you're starting with $5,000, your maximum risk per trade is around $50 to $100. Always set a stop loss. This is a non-negotiable. Stops protect you from major losses and force discipline. Know your reward to risk ratio. Only take trades that offer at least 2:1 or better. That means for every $1 you risk, you aim to make $2 or more. Walk away after your trade. Once you've taken your trade, win or lose, step away. This prevents overtrading and protects your mental capital. Remember this mantra: protecting your capital is more important than making a profit today. Let your edge play out over time. 1 good trade a day, properly managed, is more powerful than 5 reckless ones. Point 4. Review. Learn, refine, repeat. The final piece of the blueprint is the most overlooked. Review. You don't grow by repeating mistakes. You grow by learning from them. That's why journaling and reviewing your trades is essential to long-term success. Here's what you review after each session. What did you do well today? Where did you break your rules, if at all? Did you follow your plan exactly? What would you do differently next time? Write it down. Track your performance. Review your screenshots. Over time, patterns will emerge, both good and bad. The bad ones you fix. The good ones you strengthen. This is how you build a trading system that evolves with you. Puzzle piece, putting it all together. Let's recap the full 1-hour trade blueprint. Preparation, scan, plan, mark your levels. Execution. Take 1. Quality. Trade only. Risk management. Control risk like a pro. Review. Journal, reflect, and refine. This system is elegant because it's simple. There's no magic indicator, no complicated math, just a structured, repeatable approach that keeps you focused and free. That you'll be amazed at what happens when you stick to it. Alarm clock, why just 1 hour? You might be asking, why 1 hour? Why not 2 or 3 if I want to earn more? Here's the truth. The market is most active and predictable during specific windows, especially in the first hour of the day. That's when volume spikes, trends establish, and opportunities are most obvious. Trading longer doesn't give you better odds. It just exposes you to more noise, more emotional decisions, and more risk. When you follow this blueprint, you train yourself to be patient, be precise, and walk away with discipline. That's the edge. That's the magic. That's the freedom. Key final thoughts. Discipline creates freedom. The 1-hour trade blueprint isn't about chasing trades. It's about creating a process that does the heavy lifting for you. You prepare, execute, manage, and review, all within a focused time window. Then you're done for the day. You don't trade all day. You don't stress. You don't guess. You follow your system, take your shot, and go live your life. In a world where everyone's trying to do more, you're going to do less, but better. And that's what creates real freedom. Chapter 3. Your trading tools and setup. You don't need 10 screens, a fancy chair, or expensive gear. You need clarity, speed, and control. Many new traders fall into the trap of thinking that success depends on having the most high-tech setup. They imagine rooms filled with blinking monitors, complex software, and trading stations that look like mission control at NASA. But here's the truth. You only need a few essential tools, and you must know how to use them well. In this chapter, we'll walk you through the exact tools, charting software, and layout you need to run the 1-hour trade system effectively. Whether you're trading from a laptop, desktop, or even a mobile device, the goal: to build a minimalist setup that supports speed, focus, and simplicity. 1. Your trading hardware. What you really need. Let's start with the basics, your equipment. Don't worry, you won't need to break the bank. Here's what's essential. White heavy checkmark. A reliable computer or laptop. Your device must be fast enough to handle charting software and brokerage platforms without freezing. Reliable. No sudden shutdowns or battery failures mid-trade. You do not need a gaming PC or custom-built machine. Most mid-range laptops or desktops from the past 2 to 3 years will do the job well. White heavy checkmark. A stable internet connection. This is non-negotiable. A dropped internet connection during a trade can be costly. Make sure you have at least 100 megabits per second speed. A backup option, like mobile hotspot or a second network, just in case. White heavy checkmark. Optional. Second monitor. If you want to monitor charts and execution separately, a second screen can help. But again, it's not required. Minimalism equals focus. 2. Charting software. Your trading dashboard. This is where the real action happens. Your charting platform. You want a charting tool that is fast, user-friendly, and supports the indicators and time frames you'll use. Top recommendations. Small Blue Diamond Trading View. Best for simplicity and speed. Web-based, no installation required. Easy to draw. Support /resistance lines. Great for clean charting and alerts. Free version is solid. Paid versions offer more data and indicators. Small Blue Diamond Thinkorswim. Advanced, US-based traders. Offers real-time data, built-in scanners, watch lists, and scripts. Heavier on system resources, but extremely powerful. Small Blue Diamond MetaTrader 4/5 or NinjaTrader. For FX and futures traders. Reliable execution and technical analysis tools not beginner-friendly, but popular with advanced users for most one-hour traders. TradingView is more than enough. It's intuitive, fast, and works across all devices. 3. Brokerage platform. Where you place your trades while your charting software helps you plan your trade, the brokerage platform is where you actually place it. You need fast order execution, low spreads, or commissions, clean order entry tools. Stop loss and take profit options, built-in top broker choices. White heavy checkmark TD Ameritrade / Thinkorswim. Great for US stocks. White heavy checkmark interactive brokers. Global. Low cost. Powerful platform. White heavy checkmark Webull / Robinhood. Simple UI. Easy for beginners. White heavy checkmark MetaTrader brokers. Great for Forex and CFDs. White heavy checkmark Binance / KuCoin. If you're trading crypto, always make sure your broker is regulated in your country. And offers stop loss and risk management tools that if your broker doesn't allow you to preset stops and targets before entering a trade, run. 4. Your 1-hour trade toolkit. The must-have features regardless of your platform. Here are the tools you'll need to successfully run your 1-hour trade system. White heavy checkmark real-time candlestick charts, preferably on the 1-minute, 5-minute, and 15-minute time frames. White heavy checkmark drawing tools so you can mark support and resistance breakout zones, trend lines. White heavy checkmark volume indicators. Volume confirms price action. Always monitor spikes for momentum. White heavy checkmark alerts set price level alerts so you're not glued to the screen. White heavy checkmark trade journal can be a simple Google Sheet, Excel file, or journaling app like TraderSync, Edgewonk, or Notion. Frame picture 5. Screen layout. Keep it simple. Here's how to set up your trading screen for peak focus. Left panel. Your watch list, limit it to 2 to 5 tickers per day. Color code based on interest level or setup. Quality center panel. Main chart 5-minute or 15-minute chart with clear candlesticks. Plot support / resistance and breakout levels. Keep it uncluttered. Price action is king. Right panel. Optional secondary time frame or order entry. Use this space to see a higher time frame, e.g. 1 hour or daily. Or keep your order entry and position info here. 6. Your daily setup routine in 10 minutes or less. Here's your morning prep, done before the market opens. Open your charting software and brokerage. Scan the market for gappers, high-volume movers, or news-based plays. Create your watch list. Stick to 2 to 5 strong candidates. Mark key levels on your chart, pre-market highs, previous day support / resistance, etc. Set alerts at breakout points. Double-check your trade journal for yesterday's notes. All this takes less than 10 minutes when you're consistent. When the market opens, you're calm, prepared, and ready to strike, not scrambling. Final thoughts. Tools don't make the trader. Clarity does. The 1-hour trade strategy is built on simplicity and efficiency. The fewer distractions you have, the more clearly you'll see what matters. It's tempting to chase shiny software and buy new gadgets, but those things won't make you profitable. What will? A clean chart, a fast execution platform, a focused mind, and a bulletproof routine. Your setup is your edge. Not because it's flashy, but because it's optimized for speed, clarity, and discipline. Chapter 4. Choosing the right stocks. Not every stock is worth your time. The right trade starts with the right stock. Before you can execute a perfect 1-hour trade, you must first identify the right stock to trade. This decision is crucial. If you're trading a dull stock that's barely moving or one that's erratic without structure, you're setting yourself up for stress, or worse, loss. The great news is, you don't need to skin thousands of tickers. You only need a few high-quality stocks each day that fit the 1-hour trade criteria. In this chapter, we'll walk through exactly how to choose the right stocks, the ones that move with purpose, respond to technical levels, and offer clean entries with solid potential. The 1-hour trade stock criteria. We aren't looking for any stock. We're looking for the right kind of stock. The ones that make clean moves, have volume, and fit our strategy. Here are the core filters that every 1-hour trade stock must pass. Liquidity. Liquidity means the stock trades enough volume that you can get in and out easily without major slippage. Look for stocks trading at least 1 to 2 million shares per day. In the first hour of the trading day, we want strong volume. Surges. This shows institutional or news-driven interest. Without volume, price moves are unreliable. Volatility. We want stocks that move, but in a manageable way. Look for stocks that typically move at least 2% to 5% intraday. Avoid ultra-low volatility tickers that trade in tight ranges. Also avoid extremely wild movers unless your advanced volatility gives us opportunity, but controlled volatility is what we aim for. News or catalyst stocks that move big usually have a reason. That's where catalysts come in. Earnings announcements, FDA approvals, analyst upgrades/downgrades, mergers or acquisitions, big product launches, industry-specific news. A strong catalyst creates momentum, and momentum is our playground. Clean chart structure. Not all stocks with news are tradable. We want clear support and resistance zones, recognizable chart patterns like flags, breakouts, and consolidations. No choppy, sideways, indecisive price action. If the chart looks messy, skip it. We only trade what's clean and obvious. Building your daily watch list in 15 minutes or less. Let's now put this into action. Each morning, before the market opens, you'll spend 10 to 15 minutes building your watch list. This list will contain 2 to 5 stocks that pass your filters and look promising for the day. Step 1. Use a pre-market scanner. Use a scanning tool like TradingView Screener, Finviz.com, great for free scans. Benzinga Pro Trade Ideas for advanced traders. Set your scan to look for stocks up/down more than 2%, pre-market volume over 200K, pre-market recent or breaking news, price between $5 and $100 for manageable volatility. Step 2. Check for a catalyst. If the stock is moving pre-market, ask yourself, why? Is there a news headline, earnings, rumors? If there's a solid reason, it earns a place on your watch list. Step 3. Chart the setup. Open the chart and look for clean trends, well-defined support/resistance, possible breakout or breakdown zones, volume confirmation. If it's choppy or unclear, remove it from your list. You only want clean opportunities. Top stock types to watch over time. You'll start recognizing common stock types that work well with the 1-hour trade strategy. Here are 3 you'll want to watch for daily momentum movers. These are stocks making big moves on fresh news, often on the top gainer/loser list. Strong volume, gaps up or down, pre-market fast movers, great for breakout setups. Example, a biotech stock up 15% on FDA approval news. Technical breakouts. These are stocks breaking out of key levels, resistance, channels, or trend lines. Often no major news, purely technical traders jumping in clean and consistent moves. Example, a stock breaking a 3-month high with volume. Reversal play, stocks that gap up or down too far, too fast, and then reverse. Often fade back toward a support/resistance zone. Look for wicks, exhaustion candles, or divergence. Example, a stock that gaps up 20%, spikes, then quickly sells off, setting up for a short. Stocks to avoid. Just as important as choosing the right stocks is avoiding the wrong ones. Here are red flags. Low volume penny stocks. They're unpredictable and can be manipulated. Spreads too wide. If the bid/ask difference is large, your entry/exit will be messy. Stocks with no news, no volume, no trend. These are time wasters, overcrowded trades. Sometimes popular names get overhyped and behave erratically. Your time is valuable. Focus only on stocks that meet your filters and respect your strategy. Pro tip: stick to familiar names. It's okay to trade the same stocks multiple times a week if they keep showing up. Familiar names help you read price action, better respond predictably to levels, reduce uncertainty. Stocks like Tesla, Apple, Nvidia, AMD, and Meta are frequent movers that often offer clean setups that don't feel pressure to find new tickers every day. Let the winners come to you. Mindset reminder: don't force it. Some days, nothing meets your criteria. That's okay. No trade is a trade. If the market doesn't offer you a setup that fits your strategy, walk away. Don't chase, don't force. You are a precision sniper, not a machine gunner. One clean trade is better than 10 random ones. White heavy checkmark. Chapter recap. Choosing the right stocks. Let's summarize your checklist for choosing high-quality 1-hour trade candidates. White heavy checkmark has volume, 1M plus daily, strong pre-market activity. White heavy checkmark shows volatility, 2% plus intraday moves. White heavy checkmark has a catalyst, news, earnings, upgrades, etc. White heavy checkmark features a clean chart with clear technical levels. White heavy checkmark is within your price range and comfort zone. White heavy checkmark offers a high probability setup, breakout, pullback, Reversal. If it checks all these boxes, it goes on your watch list, but if not, move on. There are thousands of stocks out there. Your job is to find the best 2 to 5 each day. Chapter 5. The Power of Price Action. Price never lies. It tells the truth in silence. Many traders overload their charts with dozens of indicators, MACD, RSI, Bollinger Bands, stochastics, you name it. They chase signals from tools that are often late, conflicted, or confusing. But the pros, they don't rely on noise. They rely on price action, the language of the market itself. This chapter is about learning to read that language fluently. Because when you master price action, you'll understand when to enter, when to exit, and when to stay out, just by looking at the chart. What is price action? Price action refers to the movement of a stock's price over time, typically viewed through candlestick charts. It's the raw, unfiltered behavior of buyers and sellers battling it out, that NO indicators. No predictions, just the truth of the moment. Imagine watching 2 boxers. You don't need stats or commentary. You can see who's winning by observing the action. The same is true for price charts. The candlestick, your language translator candlestick charts are the clearest way to see price action. Each candle tells a mini story. The open, where the battle began to close. Who won that round, buyers or sellers? The wick, how far the price tried to go before getting rejected. Here are the basic candle types and what they tell us. White heavy checkmark bullish candle close is higher than open. Buyers dominated. White heavy checkmark bearish candle close is lower than open. Sellers dominated. White heavy checkmark doji open and close are nearly the same. A standoff, indecision. White heavy checkmark long wicks rejection. Price tried to move in one direction but failed. These candles create patterns, and patterns tell us where the next big move may happen. The core principle, support and resistance. Price reacts to levels. Areas where it bounced up in the past equals support, got rejected equals resistance. These are not just lines. They're zones of emotion, fear, greed, hope, regret. Price action teaches us to watch how candles behave at these zones. Bullish confirmation. At support, possible long. Bearish rejection at resistance, possible short. NO indicator can read these moments as clearly as your eyes on the chart. Key price action patterns, your trading signals. Let's look at powerful patterns you'll use in 1-hour trades. 1. Bullish engulfing small red candle followed by a big green candle that engulfs the red seen at support or after a downtrend. Signal, strong buyer reversal. Great long setup. Point 2. Bearish engulfing small green candle followed by a big red candle engulfing it seen at resistance or after an uptrend signal. Strong seller rejection. Short opportunity. Point 3. Pin bar / hammer small body. Long lower wick looks like a hammer appears at the bottom of a move or support zone signal. Rejection of lower prices. Buyers stepping in. Point 4. Shooting star / inverted hammer small body, long. Upper wick appears at the top of a move or resistance signal. Sellers are pushing back. Potential reversal. Down. Point 5. Inside bar a small candle entirely inside the range of the previous candle shows consolidation signal. Market is pausing. Prepare for a breakout. Point 6. Breakout candle, a large candle that breaks above resistance or below support, ideally with high volume signal. Price is ready to run. Jump in with momentum. Reading the story, not just the setup. A candle is one word. A pattern is a sentence, but the chart is the story. Before every trade, ask, what has price been doing? Trending? Ranging? Are we at a key level? Are buyers or sellers stronger here? Is there follow-through after patterns? You don't just memorize patterns. You interpret them in context. That's where real trading edge lives. Boanero, how price action improves your entries when you trust price action. Your entries become cleaner because you're acting on real signals earlier. You don't wait for lagging indicators. More confident because you understand the why behind the move. A perfect price action setup might look like this. Stock gaps up with volume, pulls back to previous resistance, now acting as support. Forms a hammer candle, next candle breaks the high of the hammer, boom. You enter long with tight stop loss below the wick. That's a textbook 1-hour trade. Price action versus indicators. Why less is more? Let's be clear. Indicators can help confirm trades, but they are lagging. They show what's already happened. Price action shows what's happening now. Indicators follow price. Price doesn't follow indicators. Once you learn to read price directly, you'll find yourself needing fewer tools and making faster decisions. That it's clarity. It's confidence. It's freedom. Mental shift. Be the observer, not the predictor. One of the biggest mental upgrades you can make as a trader is this: stop predicting. Start responding. Price action is not about guessing the future. It's about watching what the market is telling you and responding with discipline. That means you wait for your pattern. You let the candle form fully. You only enter when your plan aligns with the story on the chart. No guessing. No gambling. Just precision. White heavy checkmark. Chapter recap. The power of price action. Let's summarize your key takeaways. White heavy checkmark. Price action is the clearest, purest way to read the market. White heavy checkmark. Candlesticks tell stories. Learn to read them. White heavy checkmark. Key patterns: engulfing, pin bar, inside bar, breakout candles offer trade signals. White heavy checkmark. Support and resistance zones are emotional battlegrounds. Watch how price behaves there. White heavy checkmark. Context matters. Don't trade patterns blindly. White heavy checkmark. Stop predicting. Start observing. Chapter 6. The entry strategy. Timing is everything. You can choose the perfect stock, but if your timing is off, the market will humble you. In the world of 1-hour trading, timing is your golden compass. You've already learned how to find the right stock, read price action, and understand market behavior. Now it's time to master the most important moment in every trade: your entry. This chapter is about developing a disciplined, repeatable strategy for when and where to strike. Because one great entry can make the difference between a winning trade and a frustrating loss. Let's break it all down, step by step. Why timing matters so much. The market moves in waves. Even when a trade idea is solid, entering at the wrong moment, like in the middle of a pullback or at the peak of a spike, can lead to choppy price action, emotional exits, missed profits, unnecessary losses. Your goal is to enter when the odds are in your favor, when buyers or sellers are clearly in control, and there's confirmation of direction. In other words, you don't guess. You wait for proof. The entry checklist. Don't click without it before entering any trade. Walk through this simple checklist. White heavy checkmark. Is this stock on my watch list? White heavy checkmark. Is there volume confirming interest? White heavy checkmark. Are we near a key support/resistance zone? White heavy checkmark. Is price action clean and forming a recognizable pattern? White heavy checkmark. Is there a clear risk level and stop loss point? White heavy checkmark. Has a trigger candle formed? If all these conditions align, you're ready. Entry strategy number 1. The breakout entry. Perfect for momentum trades, news catalysts, range breakouts. A breakout happens when price explodes through a resistance level with strong volume. What to look for? A tight consolidation just below a key level volume, building up a strong bullish candle that closes above resistance. Follow through candle confirms at entry. Enter as price breaks above the previous resistance with volume confirmation. Stop loss just below the breakout level. Now new support. Example: $25.00 is a resistance zone. Price consolidates, then breaks out with a strong green candle and volume surge. You enter at $25.15. Place your stop at $24.70 and aim for $26.50. White heavy checkmark. Clean. Strategic. High probability. Repeat button. Entry strategy number 2. The pullback entry. Perfect for traders who want better risk reward. Sometimes, after a breakout, price pulls back to retest the broken resistance, now acting as support. This is where many professionals enter. What to look for? Price breaks out, then pulls back in a controlled way, not a crash. Forms a hammer or engulfing candle at the new support. Volume tapers on the pullback, then surges on the bounce. Entry. Enter. On the bounce after the support. Hold stop loss just below the low of the pullback candle. Example: stock breaks out at $30, rises to $31.20, then pulls back to $30.10. It holds that level and forms a bullish pin bar. You enter at $30.25, stop at $29.90, target $32.00. White heavy checkmark. Smart entry. Better price. Reduced risk. Clockwise vertical arrows. Entry strategy number 3. The reversal entry. Perfect for catching short-term tops or bottoms. Reversal entries aim to profit from a shift in momentum when price rejects a level and starts moving in the opposite direction. What to look for? A stock that's overextended, too far up or down. Price hits a major level, support/resistance. Gap, moving average, a clear rejection candle forms, like a shooting star, engulfing, or pin bar. Follow-through candle shows the reversal is. Real entry. Enter on the break of the reversal candle's high, if going long, or low, if shorting. Stop loss. Just beyond the wick of the reversal candle example. Stock spikes to $48.70, hits resistance, and forms a shooting star. Next candle confirms. With a red close. You enter short at $48.20, stop at $48.80, and target $46.50. White heavy checkmark excellent for fast, high-reward setups. Candlestick entry triggers. Your confirmation signal. Let's talk trigger candles. The candles that tell you, now's the time. Here are your top signals. Small orange diamond bullish engulfing. The green candle fully engulfs the previous red one equals buyers in control. Small orange diamond hammer/pin bar. Long lower wick shows buyers rejected lower prices. Small orange diamond breakout candle. Strong body with high volume. Breaking a level equals momentum incoming. Small orange diamond inside bar break. Price consolidates, then breaks out of the tight range equals explosive potential. Only enter once the trigger candle completes. Don't jump in while it's still forming. Wait for confirmation. Be the sniper, not the scatter shooter. Volume is your wingman. Volume is your best friend at entry. If a breakout happens on low volume, be suspicious. If a pullback bounce comes with strong volume, trust it. If a reversal shows big wick rejection plus spike in volume, it's real. Price tells you the story. Volume confirms it's true. Managing risk on entry. The stop loss principle. Your stop loss is not a sign of weakness. It's a tool of precision. Before every entry, ask, where is this trade invalidated? That's your stop. For breakouts, just under the breakout level. For pullbacks, just under support. For reversals, just above the high of the reversal candle. If shorting, or below the low, if going long. And never risk more than 1 to 2% of your account on a single trade. This keeps you in the game long term. Mistakes to avoid with entry timing. Even with a solid plan, traders often make these entry mistakes. Crossmark entering too early, before the pattern confirms. Crossmark chasing green candles without volume, or pullback. Crossmark trading mid-range, not near key levels. Crossmark ignoring your stop level, or over-leveraging. Crossmark entering based on emotion instead of set up the fix. Be patient. Wait for your edge to show up. White heavy checkmark chapter recap. Entry strategy. Timing is everything. Let's lock in the lessons. White heavy checkmark entries must be planned and confirmed, not guessed. White heavy checkmark use setups. Breakouts, pullbacks, reversals. White heavy checkmark confirm with price. Action plus volume. White heavy checkmark use trigger candles. Engulfing, pin bar, inside bar, breakout. White heavy checkmark always define risk and stop loss. White heavy checkmark stay patient, stay disciplined. Chapter 7. Exit like a pro. Taking profits and cutting losses. Amateurs focus on entries. Professionals master exits. You found the right stock. You've read the price action. You entered the trade with precision. But the real magic, the secret to long-term success, happens at the exit. Getting in is exciting. Getting out is where you get paid. In this chapter, we'll show you how to exit like a pro, locking in profits before they vanish and cutting losses before they grow. Because mastering the exit is what separates a lucky trade from a repeatable trading business. Why your exit strategy matters more than you think. Most new traders obsess over entries. They look for the perfect signal, the best candlestick, the cleanest breakout. But even the best entry means little if you don't know when and how to get out. Here's the truth. Lightbulb, a bad exit can turn a winning trade into a loss. Lightbulb, a smart exit can turn an average trade into a winner. Lightbulb, an emotionally driven exit can ruin your confidence. Exits must be strategic, not emotional. Let's explore how. The two faces of exit. There are only two types of exits in any trade. White heavy checkmark profit exit. When price reaches your goal. Crossmark stop loss exit. When price proves you wrong. Both are equally important. A professional trader respects both. There's no ego, no hope, just the plan. Let's break each one down. The profit exit. Locking gains before they disappear. The market is never obligated to give you more profits. It can reverse in an instant. That's why every good trade needs a target, a clear level where you'll say, "That's enough." How to set profit targets. Previous highs or lows price often stalls or reverses at prior key levels. Use them as realistic targets. Support/resistance. Zones look left on the chart. Where has price reacted before? That's likely to happen again. Round numbers stocks love clean numbers. $10, $25, $50. Price often pauses there. Measured moves. If a stock moved $1 on the last breakout, it may do the same again. Project it forward. Example, you buy a stock at $45 after a breakout. The next major resistance is at $48. That's your target. You exit at $47.90 and bank the gain. Simple, clean, professional. Scaling out. Lock profits gradually. Another advanced exit method is scaling out, taking profits in parts. For example, sell 50% at target 1, move your stop loss to break even. Let the rest ride to target 2. This lets you protect profits while staying in the trade if momentum continues. It's like getting paid and playing with house money at the same time. The stop loss exit. Cut losses before they cut you. Let's be real. Not every trade will work. And that's okay. Losses are part of the game. But what destroys traders is not losing. It's not knowing how to lose small. A stop loss is your safety net, your risk control system, and your emotional insurance. Where to place your stop loss. Beyond the pattern's invalid point. If your setup fails, that's your exit. For example, below the low of a bullish engulfing pattern. Just outside support/resistance. If price breaks past a key level, the setup is invalid. Exit. Volatility-based stop. Use ATR, average true range, to give price room, but still manage risk. Fixed dollar or percent risk. Risk $100 per trade. Your stop is where your position hits that number. Example, you buy at $30. The support is at $29.40. You place your stop at $29.30. If price drops, you're out. No drama. You live to trade again. Trailing stops. Let winners run. Cut losers fast. A trailing stop is a stop loss that moves up as price moves in your favor. It locks in profit without capping potential gains. 2 ways to trail your stop. Manual. Trailing. Move your stop up under new support levels as price rises. Percentage or dollar-based. Set a rule. Trail by 50 cents below the last high, or trail by 2%. This strategy helps you stay in winning trades longer without giving back too much if the market turns. Emotional discipline. The invisible exit tool. Even with perfect technicals, your exits can fail if you don't control your emotions. Fear makes you exit winners too early. Hope makes you hold losers too long. Greed makes you ignore targets and chase more. The solution? Follow the plan. Always place your stop, place your target. Walk away if you need to. Let the trade play out. Your job isn't to predict, it's to execute. Losses are lessons. If you let them be, a stop loss is not a punishment. It's a small tuition fee in the University of Trading. Every loss is feedback. Was my entry good? Did I size my trade correctly? Did I follow my rules? Use your exit data to refine your strategy. That's how pros evolve. White heavy checkmark. Chapter recap. Exit like a pro. Here's what you've learned. White heavy checkmark. Exits must be pre-planned, not emotional. White heavy checkmark. Use realistic targets based on structure. White heavy checkmark. Consider scaling out to lock gains and ride trends. White heavy checkmark. Always have a stop loss. Your risk guard. White heavy checkmark. Use trailing stops to ride momentum. White heavy checkmark. Let go of ego. Trust the plan. Win or lose. Exit with discipline. Chapter 8. Money management for freedom traders. Protecting your capital isn't just smart. It's the key to staying in the game and winning over the long haul. In the world of trading, your most valuable asset isn't the hot tip or the latest indicator. It's your trading capital. Without effective money management, even the best strategies and setups can't save you from catastrophic losses. This chapter focuses on the art and science of managing your money wisely, how to protect your account, control risk, and ensure that every trade you take moves you closer to financial freedom. Because when you master money management, you're not just trading stocks, you're trading with confidence, discipline, and peace of mind. Why money management is your true trading edge. Many novice traders focus all their energy on finding the perfect setup or the secret indicator. But the harsh reality is this: the difference between consistent winners and those who Fail is how they manage risk and protect their capital. You can have a 70% winning strategy, but if you risk too much on any one trade, a few losses in a row can wipe out months or years of profits. Money management isn't about being cautious or timid. It's about being smart and strategic. It's the foundation that supports everything else. The golden rule: risk only 1% to 2% per trade. One of the most widely respected rules among professional traders is never risk more than 1% to 2% of your total trading capital on a single trade. Why? It limits the damage any single loss can cause. It helps preserve your capital for future trades. It keeps your emotions stable, preventing panic or revenge trading. Example: if your trading account has $10,000, risk no more than $100 to $200 per trade. This means if a trade goes against you, your maximum loss is contained, so you can stay in the game longer. Calculating position size with precision: once you know how much you're willing to risk, you can calculate the position size, the number of shares or contracts to buy or sell. The formula is position size equals risk per trade, risk per share / text, position size equals /frac /text, risk per trade / text, risk per share. Position size equals risk per share, risk per trade, where risk per trade equals 1% or 2% of your account balance. Risk per share equals entry price minus stop loss price. Example calculation: account size $10,000, risk per trade 1% equals $100, entry price $50, stop loss price $48, risk per share equals $50 to $48 equals $2. Position size equals 1,002 equals 50 shares / text. Position size equals /frac 102 equals 50 / text shares. Position size equals 2100 equals 50 shares. This means you buy 50 shares and risk $100 if the stop loss hits. Protect yourself with stop loss orders. Setting a stop loss is one of the most effective ways to control risk. It automatically closes your trade if the price moves against you beyond a certain point. Always decide your stop loss before entering a trade. Never move your stop loss further away hoping the trade will turn around. Adjust stops only to lock in profits as the trade moves in your favor. Stop losses protect your account from large, emotional losses and preserve your trading capital. Diversify to avoid overexposure. It's tempting to put all your money into what seems like a sure thing, but overexposure is dangerous. Avoid risking large portions of your account on a single trade or sector. Spread your risk across multiple stocks or instruments. Keep some cash reserved for new opportunities or market changes. Diversification smooths out volatility and lowers the chance of catastrophic loss. Let profits run, cut losses quickly. Successful money management is also about how you manage your winners and losers. Use trailing stops to protect profits as a trade moves in your favor. Move your stop loss to break even once the trade is comfortably profitable. Take partial profits to reduce risk, but stay in the trend. Don't hold losing trades hoping for a turnaround. Cut losses swiftly. This approach ensures you maximize gains while minimizing the damage of losses. Avoid the all-in mentality even if you're confident. Avoid risking your entire account or a large chunk on a single trade. Going all in is a fast track to blowing your account. Smart traders manage risk with small, consistent bets. This approach preserves your capital so you can learn, adapt, and grow. The psychological edge of money management: knowing your risk is controlled gives you a psychological advantage. You stay calm even when trades don't go your way. You avoid emotional decisions driven by fear or greed. You maintain discipline and stick to your plan. You develop confidence. Knowing you can handle losses. Trading with peace of mind is a game changer. Keep a detailed money management journal. Record every trade with details about entry and exit prices, position size, risk per trade, outcome, win or loss, emotional state during the trade. Review your journal regularly to identify mistakes, improve your risk management, and reinforce good habits. White heavy checkmark. Chapter recap: money management for freedom traders. White heavy checkmark: always risk no more than 1% to 2% of your account per trade. White heavy checkmark: calculate position size based on your risk and stop loss level. White heavy checkmark: use stop loss orders consistently to protect capital. White heavy checkmark: diversify to avoid putting too much at risk on one trade. White heavy checkmark: let your winners run with trailing stops. Cut losers fast. White heavy checkmark. Never risk your entire account on one trade. White heavy checkmark. Master your psychology with controlled risk. And discipline. White heavy checkmark. Keep and review a money management journal to improve. Chapter 9. Mastering the 1-hour mindset. Your mindset is the single greatest asset in your trading toolbox. Trading isn't just about charts, entries, or money management. The secret weapon of every successful trader is mindset, the way you think, react, and stay focused, especially when the market is chaotic. In this chapter, we dive deep into developing the 1-hour mindset, the mental clarity, discipline, and confidence you need to make the most of your short, powerful trading sessions, because trading smart in one focused hour requires more than technique. It demands mental mastery. Why mindset matters more than strategy. You can learn all the indicators, setups, and money management rules. But without the right mindset, emotions will take over. Fear can freeze you out of good trades. Greed can push you to chase bad ones. Anxiety can make you second-guess every move. The 1-hour mindset is about calm, clear, confident decision-making in a fast-paced environment. The power of focus. 1 hour, 0 distractions. 1 hour may sound short, but it's enough time to execute quality trades. If you stay completely focused, this means no phone notifications, no multitasking, no browsing news or social media, just you, your charts, and your plan. This laser focus helps you read the market's subtle signals and react quickly. Developing emotional discipline. Markets will always throw curveballs, unexpected moves, gaps, or news. Emotional discipline means accepting losses without panic, taking profits without greed, sticking to your plan without hesitation. How? Use breathing techniques to calm nerves before trading. Practice mindfulness to stay present in the moment. Develop a mantra or affirmation like, I trade with patience and discipline, trading with a clear plan. No guesswork. Mindset also means trusting your strategy before your 1-hour session starts. Know your watch list, have clear entry and exit rules, set your risk parameters, then follow through with confidence. Avoid impulsive trades or just checking the charts outside your session. Managing stress and avoiding overtrading. 1-hour trades can be intense, but don't let stress push you into overtrading. Signs you're stressed. Racing hard, impatience to jump, and constant second-guessing. When you feel this, take a break. Step away, breathe, and remind yourself, quality over quantity. Building confidence through small wins. Confidence grows from experience and small, consistent successes. Start with smaller position sizes, realistic profit targets, accepting losses gracefully. Each successful trade, no matter how small, builds trust in your ability. The importance of routine and preparation. Mastering your mindset is easier when you have a solid routine. Review yesterday's trades before the session. Meditate or practice breathing exercises. Set clear goals for the day. Prepare your trading environment. Clean desk, charts ready. A routine conditions your brain for success and focus. Visualization. See success before it happens. Top traders use visualization to mentally rehearse. Visualize spotting your trade setups. Imagine calmly entering and exiting trades. See yourself sticking to your plan and managing emotions. This primes your mind to perform better under pressure. Avoiding common mindset pitfalls. Watch out for these traps. Overconfidence. Thinking every trade will be a winner. Revenge trading. Trying to make back losses quickly. Analysis paralysis. Freezing due to too much information. Recognize them early and reset your mindset when needed. White heavy checkmark. Chapter recap. Mastering the 1-hour mindset. White heavy checkmark. Mindset is your greatest trading asset. White heavy checkmark. Maintain laser focus for your 1-hour sessions. White heavy checkmark. Cultivate emotional discipline with mindfulness and breathing. White heavy checkmark. Trade only with a clear, trusted plan. White heavy checkmark. Manage stress. Avoid impulsive overtrading. White heavy checkmark. Build confidence through small, consistent wins. White heavy checkmark. Create a solid pre-trading routine. White heavy checkmark. Use visualization to prepare your mind for success. White heavy checkmark. Avoid mindset pitfalls like overconfidence and revenge trading. Chapter 10. Your daily 1-hour routine. Consistency beats intensity. One focused hour every day builds trading mastery. The secret to becoming a successful 1-hour trader isn't just having great strategies or perfect setups. It's having a daily routine that keeps you disciplined, prepared, and sharp. Your daily routine turns trading from a gamble into a professional habit. In this chapter, we will build the step-by-step 1-hour trading routine that helps you maximize every minute, keep emotions in check, and steadily grow your trading account, all while preserving your freedom and sanity. Why routine matters in trading markets. Don't wait for you to be ready. Trading without routine leads to emotional trading, missed opportunities, overtrading or undertrading, unclear decision-making. A daily routine builds discipline, confidence, focus, consistency. These qualities form the foundation of long-term success. The 1-hour daily trading session breakdown. Your 1 hour can be divided into 3 focused phases. Phase time: purpose, preparation, and review. 15 minutes analyze markets, set goals. Active trading: 30 minutes execute trades with focus, review, and reflection. 15 minutes record trades, lessons learned. Phase 1: preparation and review. 15 minutes. Preparation is everything. Use these 15 minutes to get into the right mental and analytical space. Check market conditions, review major indices, news headlines, and overall sentiment. Review watch list, confirm your stocks or instruments for the day. Remove ones that no longer fit your criteria. Analyze key levels, identify support, resistance, and potential breakout zones on your charts. Set daily goals, decide on profit targets, risk limits, and mental goals like staying calm and disciplined. Mental preparation: spend 2 to 3 minutes practicing deep breathing or mindfulness to clear your mind. Phase 2: active trading, 30 minutes. This is your focused execution window. Here's how to make it count. Stick to your plan. Only trade setups that meet your criteria. Avoid impulsive decisions. Focus on 1 or 2 stocks. Don't get distracted chasing multiple trades. Master your chosen setups. Use limit orders. Control your entry price and reduce slippage. Watch price action. Pay attention to volume, momentum, and price movement. Confirm your entry signals. Manage risk. Place stop-loss orders immediately upon entry. Adjust trailing stops if needed. Avoid overtrading. Limit yourself to 1 to 3 trades max in this session. Quality over quantity. Stay emotionally neutral. If you feel anxious or impatient, take a break or pause the session. Phase 3: review and reflection, 15 minutes. The final phase seals the deal on your progress. Record your trades. Document entry, exit, position size, profit/loss, and emotions felt. Analyze what worked. Identify setups and decisions that led to success. Note mistakes. Recognize errors or impulsive actions to avoid next time. Update your journal. Track your progress over time to spot patterns and improve. Plan for tomorrow. Jot down adjustments or watch list changes based on today's session. Building consistency. Habits that support your routine. Great traders aren't just lucky. They have habits that build resilience and discipline. Same time, same place. Trade at the same hour daily to train your mind and body. Limit distractions. Create a quiet environment. Turn off notifications. Healthy lifestyle. Sleep well, eat healthily, and exercise to boost mental clarity. Continuous learning. Spend some time outside your hour reading, watching, or analyzing markets. The feedback loop. Continuous improvement. Your daily review phase is where your growth happens. Use your journal to track win rates, risk-reward ratios, and emotional states. Adjust your strategy or routine as needed. Celebrate small victories. They compound over time. Tips for success in your 1-hour routine: be patient. Results won't come overnight. Stick with your routine. Stay flexible. Markets change, so adjust your watch list and strategies accordingly. Avoid FOMO. Trust your plan. Don't chase every move. Use alarms or timers. Keep your hour disciplined and avoid running over. Take breaks. If you miss the hour, don't double up next day. Just reset and continue. White heavy checkmark. Chapter recap. Your daily 1-hour routine. White heavy checkmark. Divide your hour into preparation, active trading, and review. White heavy checkmark. Prepare by analyzing markets, setting goals, and calming your mind. White heavy checkmark. Execute focused, plan-driven trades with tight risk management. White heavy checkmark. Record and reflect on every trade to learn and improve. White heavy checkmark. Build habits that reinforce discipline, health, and consistency. White heavy checkmark. Use your journal to create a feedback loop for continuous growth. Chapter 11. Avoiding common mistakes. Every trader makes mistakes, but the best learn quickly and avoid repeating them. No matter your level of experience, trading is a journey paved with challenges. The difference between success and failure often lies in how well you identify and avoid the common pitfalls that trip up many traders. In this chapter, we'll explore the most frequent mistakes one-hour traders make and show you how to dodge them with smart habits, clear thinking, and discipline. Remember, avoiding mistakes is just as important as mastering strategies. Crossmark mistake. Number 1. Overtrading. More is not always better. One of the biggest traps for new traders is the temptation to trade constantly, chasing every market move. Why it's a problem? Overtrading increases commissions and fees. Eating into profits, it leads to poor decision-making fueled by impatience or boredom. It magnifies emotional stress and fatigue. How to avoid it? Stick strictly to your 1 hour daily trading window. Limit yourself to 1 to 3 quality trades per session. Focus on setups that meet your criteria perfectly. No chasing, maybe trades. Crossmark mistake number 2. Ignoring risk management. Ignoring or underestimating risk is a fast track to blowing your account. Why it's a problem? Without proper stops, a single bad trade can cause devastating losses. Risking too much capital on one trade creates emotional turmoil and poor choices. How to avoid it? Always use stop-loss orders before entering a trade. Never risk more than 1 to 2% of your account per trade. Calculate your position size carefully using your risk per share. Crossmark mistake number 3. Trading without a plan. Jumping into trades based on a gut feeling or reacting emotionally is dangerous. Why it's a problem? Leads to impulsive, inconsistent trades. Makes it impossible to analyze and learn from mistakes. Increases stress and second-guessing. How to avoid it? Develop a clear, rules-based trading plan. Define your entry, exit, stop-loss, and profit targets before trading. Follow your plan with discipline. No improvisation. Crossmark mistake number 4. Letting emotions control you. Fear, greed, and frustration are powerful emotions that can derail your trading. Why it's a problem? Fear may keep you from taking good trades or cause premature exits. Greed can push you to hold losers or overtrade. Frustration may lead to revenge trading or abandoning your plan. How to avoid it? Practice mindfulness and deep breathing before and during trading. Use a journal to track emotional states and triggers. Take breaks when you feel overwhelmed. Remind yourself that losses are part of trading and focus on long-term consistency. Crossmark mistake number 5. Chasing the market. Trying to catch a moving price or jump into a trade after a big move is risky. Why it's a problem? You enter at unfavorable prices with higher risk, often results in getting whipsawed or trapped in false moves. How to avoid it? Wait patiently for your setups to appear on your watch list. Enter trades only when price confirms your strategy's signal. Use limit orders to control entry price. Crossmark mistake number 6. Neglecting review and reflection. Failing to review your trades means missing out on critical learning opportunities. Why it's a problem? You repeat mistakes unknowingly. You don't build confidence from recognizing what works. Your strategy and mindset stagnate. How to avoid it? Maintain a detailed trading journal for every trade. Review your journal weekly to spot patterns. Adjust your plan and mindset based on your findings. Crossmark mistake number 7. Overconfidence and revenge trading. After a string of wins, overconfidence can push you to take unnecessary risks. Conversely, after losses, revenge trading is trying to win it back quickly. Why it's a problem? Overconfidence clouds judgment and breaks risk rules. Revenge trading leads to chasing losses, bigger bets, and emotional decision-making. How to avoid it? Stay humble and stick to your risk parameters. Accept losses calmly as part of the game. Pause trading if you notice emotional bias creeping and follow your daily routine strictly for balance. Crossmark mistake number 8. Using too many indicators or overcomplicating your strategy. Adding every indicator or signal you read about can confuse rather than clarify. Why it's a problem? Causes analysis paralysis. Too much information to process quickly leads to conflicting signals and hesitation. How to avoid it? Keep your strategy simple and focused on price action and key setups. Use only the tools that directly help your trading decisions. Master a few core concepts before expanding. Crossmark mistake number 9. Trading without adequate preparation. Trading without preparing your watch list, charts, and mindset leaves you reactive and vulnerable. Why it's a problem? Increases impulsive, poorly timed trades makes it harder to focus during your trading hour, leads to missed opportunities. How to avoid it. Use the 15-minute preparation phase to set yourself up for success. See Chapter 10. Review market conditions and plan your trades before the session. Enter trading calm and focused white heavy checkmark summary. Avoiding common mistakes. Avoid over-trading. Less is more. Always manage risk with stops and proper position sizing. Trade with a clear, disciplined plan. Control emotions through mindfulness and journaling. Don't chase the market. Wait for proper setups. Review trades regularly to learn and improve. Beware overconfidence and revenge trading traps. Keep your strategy simple and focused. Prepare thoroughly before trading. Chapter 12. Scaling up and going beyond. Once you master the 1-hour trade, it's time to grow your skill, your account, and your freedom, but with care, discipline, and vision. You've learned how to trade smarter, manage risk, and master your mindset, all within a focused 1-hour window. But what comes next? How do you scale up your trading without losing the edge and discipline that got you here? This chapter dives into the exciting but challenging journey of growing your trading account, increasing position sizes, and expanding your trading goals, all while maintaining control, focus, and sustainability. Scaling up isn't about reckless risk or chasing big wins. It's about steady, strategic growth, going beyond the beginner's mindset to become a truly professional trader. Chart increasing. Why scale up? Scaling up means increasing the size and impact of your trades, which can lead to greater profits and faster account growth. Why consider scaling up? To build meaningful wealth faster, to capitalize on your growing experience and confidence, to prepare for trading as a primary income source or career, to leverage your proven strategy for bigger opportunities. But scaling up without discipline can be dangerous. It requires careful planning and mindset shifts. Balance scale. Balance growth with risk control. As your account grows, the temptation to risk bigger amounts can be strong, but this is where many traders stumble. Key rule: never increase risk percentage per trade drastically. Keep risking 1% to 2% per trade, but increase your position size as your account balance grows. This way, your dollar risk grows naturally, but your risk management principles stay intact. Abacus calculating new position sizes. If your account grows from $10,000 to $50,000, 1% risk per trade increases from $100 to $500 risk per trade, allowing you to take larger positions while maintaining the same risk discipline. Always recalculate your position size based on updated account balance entry and stop-loss prices. Keep position sizing dynamic and aligned with your capital. Hourglass. Not done. Time commitment. When to go beyond 1 hour. The 1-hour trade approach is designed for focus and efficiency, but scaling up may require more attention. Ask yourself, am I ready to dedicate more time to research and trade management? Do I have systems to streamline preparation and review? Can I maintain discipline with longer sessions? If yes, consider gradually expanding your trading time. For example, 90 minutes or 2 hours, but never lose sight of quality over quantity. Robot face. Using technology and automation as you scale, automation tools can help. Setting alerts for setups and price levels. Automating trade entries and exits with limit and stop orders. Using trading journals and analytics software. Technology doesn't replace your skill, but supports your discipline and efficiency. Briefcase. Diversify your trading instruments. Scaling up also opens doors to diversify beyond stocks, ETFs, exchange-traded funds, options trading for strategic leverage, futures, and commodities. Diversification spreads risk and creates more trading opportunities. But start slow and educate yourself thoroughly before jumping in. Lightbulb. Developing multiple income streams from trading. Scaling beyond 1 hour can mean evolving from a part-time trader to a full-time professional. This shift often involves building multiple streams of income. Day trading profits, swing trading positions held longer, teaching or mentoring other traders, creating content, or trading-related services. Diversifying your income streams builds financial stability and reduces pressure on any one method. Brain mental shifts. For scaling up, growing your trading requires new mindset habits. Embrace patience. Bigger accounts grow through consistent small wins, not quick jackpots. Stay humble. Larger accounts mean larger responsibility. Maintain discipline. Scaling is a marathon, not a sprint. Manage stress. Increased stakes can test your emotional control. Use your 1-hour mindset tools daily. Remember, emotional stability is your best asset as you grow. Construction common pitfalls when scaling. Beware these traps as you scale. Increasing risk percentages, impulsively over-trading, or losing your focused routine, letting emotions drive bigger bets. Neglecting review and adaptation, jumping into complex instruments before mastery. Avoid these by sticking to your proven principles and gradual growth plans. White heavy checkmark. Chapter recap. Scaling up and going beyond. Scale up carefully, maintaining strict risk management. Increase position sizes in line with account growth, not risk percentage. Gradually increase trading time if needed, but prioritize focus and quality. Use technology and automation to support your process. Explore diversification into new instruments. Thoughtfully build multiple income streams related to trading. Adopt mental shifts toward patience, discipline, and humility. Avoid common scaling pitfalls with vigilance and self-awareness. Conclusion: your 1-hour wealth machine. Trading isn't just about money. It's about building a system, a machine that works for you day after day, hour after hour. Congratulations! You have journeyed through the essential steps to mastering the 1-hour trade, from mindset and strategy to risk management and scaling up. Now it's time to see the bigger picture and understand what you have truly built: your very own 1-hour wealth machine. Key: what is your 1-hour wealth machine? Think of your trading routine as a finely tuned machine. Each piece, your preparation, your strategy, your mindset, and your discipline, works in harmony to generate consistent, reliable results. The 1-hour time frame isn't a limitation. It's your secret weapon. It ensures focused, intentional trading free from noise and distraction. It builds compounding wealth through disciplined, steady growth. This machine doesn't run on luck or guessing. It runs on your skills, your rules, and your consistency. Seedling: building wealth with time and discipline. Wealth creation isn't about overnight riches. It's about the steady accumulation of gains, the compounding effect of small wins repeated day after day. Your 1-hour trade system allows you to maximize returns without sacrificing your lifestyle. Balance your trading with other priorities and passions. Keep emotions in check by limiting exposure and focusing on quality trades. The power of your system is that it respects your time while empowering your financial future. Brain: your mindset. The heart of the machine. At the core of your wealth machine lies your mindset, the most valuable asset you own. Confidence tempered by humility, patience paired with decisiveness, discipline anchored by flexibility, emotional calm amidst market chaos. Without this mindset, even the best systems can fail. Nurture it daily, and it will fuel your success far beyond trading. Rocket the freedom factor. True wealth is about freedom: freedom of time, freedom of choice, and freedom from financial worry. Your 1-hour wealth machine is designed to give you exactly that: the freedom to spend your time as you wish, the freedom to pursue passions outside of trading, the freedom to grow your wealth on your terms. By mastering this system, you unlock a future where money supports your life, not the other way around. Counterclockwise arrows button: continuous growth and evolution. Remember, your trading machine is not static. Markets evolve, your skills evolve, and your goals evolve. Keep learning and adapting your strategies. Review your trades and refine your plan regularly. Stay open to new tools and technologies. Maintain a growth mindset, always striving for improvement. This is how your machine stays sharp and continues generating wealth over the long haul. Glowing star: your next steps as you close this book. Take these key actions. Commit to your daily 1-hour trading routine with discipline. Protect your capital with smart risk management. Trust your plan and avoid impulsive decisions. Review and learn from every trade. Scale thoughtfully. When ready, nurture your mindset. Every day you are now equipped to build and run your 1-hour wealth machine. Raising hands: final thoughts. Trading is a journey, sometimes thrilling, sometimes challenging, but always rewarding for those who commit. With focus, patience, and discipline, you can transform your life, grow your financial independence, and enjoy the freedom you've dreamed of. Remember, it's not about how many hours you spend trading. It's about the quality of the hour you trade. So, start your engine. Your 1-hour wealth machine awaits. Thank you for trusting me to guide you through this journey. Here's to your success, freedom, and wealth, 1 hour at a time.